All right, welcome everyone. This is Bob Maurer. It is about noon on Monday, March 3rd. I want to do a review of the current seasonal futures spreads strategies, see how things are looking for the ongoing spreads, and then at the end, I've got one new one to introduce. Now, looking at the spreads recently, there have been some pretty good moves in some of them, and in others, I've had to tweak the entries and exits. So there are a number where the entries and exits have been revised. So I want to go through those. It's going to take a few minutes, but let's get into it. All right, dial into the portal. You will see the most current PDF version uploaded just a bit ago, 3.3. And here it is for this week of 3.2. Here's what we're working with. Got 2 pages worth here. And top row, bear spread, lean hogs. We've been looking at this one for about 3.5 weeks. I have tweaked the exits, the stop price, and then obviously that's going to work its way into the math on the P&L. So see that there. And then in terms of the cotton market here, the bull spread in the May versus July, I have tweaked the exit prices, and this is just based on walking these spreads forward. So as time evolves through the seasonal window, my interpretation of the potential gains and unrealized drawdowns can change, which just makes sense. So based on that, I am recommending that we change the targets. In crude oil, the middle here, 348 bull spread, canceling the more conservative entry, and then I am changing the targets and the stop. And then in 349, the bull spread in OJ, this one is flat. We achieved that target on a spike move to the upside, which these softs can be prone to do, especially the less liquid ones like OJ, but we'll look at that. 350, the bear spread in live cattle. We're not in this one yet. And you can see all 4 of these under the margin requirement column. The margin requirements have changed, so they can and often do change with spreads. So I'm just giving you a heads up. If you see some kind of differential on your statement night by night, that could be the reason why they're for the margin requirements. And then on the bottom here, the second page, I've got a new one introduced. It's a bear spread in feeder cattle. Feeder cattle bear spread. And this should not be yellow. We're not in this one. So it's going to be a single entry price zone, a few different targets, and we'll see how that picture looks as we get to the charts here. All right, so that's where we're at. Let's go one by one. First of all, the bear spread and lean hogs, number 346. Essentially, this market, in my opinion, is in about this range, right? Give or take. And top end being around the 160s, low end being somewhere around the 70s, 75 area. It had a probe to the upside, which allowed us to get on board, and then it rotated back to the downside. Now it's waiting to see what it's going to do. We need a little more weakness, but just in case, I have walked this forward, and I'm going to cancel this second target down here. Okay, target 2, the original target 2. I'm going to cancel that one. It does not seem feasible, so this one's going away. Target 1 will still be at 47, so that one is staying. As for the stop level, not wanting this winner to turn into a loser, we are going to drop the stop. So the original stop was 187, and now it is going to be 112. Cancel replays, get on your platforms, call your brokers, call your trade desk, whatever your preferred method is. So the new stop level is going to be 112. All right, cancel the 187, move it down to 112. All right, so this is how the picture looks now. Okay. The second target has been canceled. Entry level 2, we got filled at there, up there, 132. That's you're able to average in. And then the new stop is not going to be moved down to 112. All right. And that'll change the risk reward a bit. You can go ahead and take a look at the math on the sheet there to to see how things changed. Okay, so lower the stop, cancel target 2. We need a little more weakness. This thing ends on the 8th, which falls on Saturday. So it'll be trader's prerogative as to whether or not you want to get out on Friday or Monday. I am going to lean towards Friday. Okay, so that's 346. Did some changes there. Both levels are currently sitting with some level of unrealized gain. So that's a good thing. We just need the market to probe a little bit lower, and hopefully that'll happen for us. But we have dropped the stop where if it does rotate to the upside, we'll be out. All right, lean hogger. Okay, now cotton. Let's take a look at this one. So this is our bull spread, and I'm making some changes on this one. The original target 2 was up here at -5. Well, original target 1 was up here at -66. We're going to move that down to -86. So -66 goes down to 86. Okay. And then the original target 2 was at -5. This one, we're dropping down to -59. Target 2 goes from -5 to -59. These would be our new targets. And put this in the right color here just to coordinate everything. All right, so that's the new look of this particular strategy. Okay, so market is basically sitting in this range somewhere around in here. So a low of about where it's at now, or probed on Friday, I should say, down to about the -1615 to -120 level, and the high being up here closer to about 86. And really what we need this thing to do is just rotate back to the upside and basically stay in the range. All right. So that's where we're at with this one. Currently sitting with some level of unrealized loss for those who got in at entry level 1, which was the benchmark at -109. Entry level 2 has not been filled yet. I want to keep that there. So that's going to continue to work. And stop is not changing. Okay, it's just the targets up top here. All right. So that is strategy 347. All right, let's hop on over to the next one. Okay, this is our bull spread in crude oil. And here is the recommendations I am giving for this one as I walked it forward. So first thing, we're going to cancel entry level 2 right here. So we're going to cancel level 2. Okay. And then we're going to raise this stop up to 29. Okay, so we're canceling entry level 2, raising the stop to 29, and then I'm going to lower the targets. Okay, so target 1 had been 54. It's not going to be 49. And target 2 had been 59. It's now going to be 54. All right, so this is the new look for this strategy. Okay, so tighten up the targets and tighten up the stop. Things aren't necessarily looking that great right now, but we'll see what happens. I want it to hold above this white line here, which is the 200-day moving average. And then maybe we see it pop back up to the upside going into the end of this, which also ends on March 8th. So again, your prerogative, trader's prerogative as to whether or not you get in or you get out on Friday or Monday. I'm leaning towards Friday. All right, so that's strategy 351, and it tightens up the risk reward. You can see that right here, and we will see what happens. So currently sitting with some level of unrealized loss, modest unrealized loss. The first entry level is right here at 39, so that's where those are in who are the more aggressive traders. And we'll see how this plays out over for the rest of the week. All right, so that's strategy number 348, and we'll see how this plays out. Okay. OJ, full spread, number 349. Got in at 75 back on the 25th of February. Next day, it had a quick spike to the upside and got through this first target. So this thing did what it was supposed to do. Kind of showed some pretty good weakness on Thursday and Friday. So after Wednesday's pop, it kind of fell back a little bit. Re-allowed anybody who wanted to still get in at 75. And then today had a pretty explosive move to the upside where it looks like it might actually get the target too, but that's totally up to you as to whether or not you want to stay on board and press it to the 560 level. So this one's going to go off as a winner. It took about 5-6 trading days to do so, and everything worked out according to plan. All right, so this one's going to go off as a winner. That's strategy number 349. All right, so now what have we got left? We got live cattle. This is the last of our remaining ongoing spreads. And you can see this is doing what it's supposed to do, which means go down. But unfortunately, without us on board yet. Now it is approaching target 2, but walking this forward, there's still a pretty strong tendency for the market to find some weakness after some strength. So I just want to leave this one and keep an eye on it over through at least this week. And maybe what I'll end up doing is dropping the whole frame of this down, meaning the entry levels will come down, stop will come down, targets will probably come down also. So basically move this whole thing, this whole strategy lower, something like this, right? But we'll just see throughout the week where we end up with this, see if there's any kind of recovery or not. But basically, it's doing what it's supposed to do without us on board. So we'll keep an eye on it. I don't want to cancel it yet. I think we just might reframe it, but I will let you know about that by week's end or so. Okay, so that's live cattle bear spread strategy number 350, and so far no fill and no change to the strategy. All right, last but not least, I wanted to briefly introduce a new strategy. Now, this is a bear spread in the cattle complex, but this is the feeder cattle. So you don't want to get overly weighted in one particular commodity. You might want to choose the cattle or the feeder cattle. That's totally up to you. It's trader's prerogative. Depends on your account, what kind of risk you want to take. Risk reward on this one. So basically, number 351. Let me go through the quick dynamics here. Long August, short May feeder cattle. Margin requirement, not here. It's on the sheet. I think it was around 800, 900 bucks. And then risk reward, regular entry level, which is the only entry level we're doing. I don't need to put level 2. Is given a profile of risking 600 bucks per spread to either make 2,000 or 2,600. So nice risk reward parameters there. And the strategy is going to be to sell some strength. So we want this thing to rally up to 165, negative 165, and then break on down and hit targets. Now I've got 3 targets for now. There's a lot of time in between this seasonal window. It goes for a solid 2.5 months. So all these are in play at the moment. And obviously, as you know, as we evolve, I might peel off the target 3 and raise the targets 1 and 2, but that just remains to be seen. So we're looking to get bearish feeder cattle on a bit of a rally and then have this thing break on down. Market's been on a nice little uptrend, so this is going to be considered a counter trend move. But cattle markets of late have been falling, so for quite some time, there's pretty good structure in terms of the fundamentals that was helping to drive beef prices higher. But over the last month or so, few weeks, this thing has fallen back a bit. So that might have played out. Maybe. All right. But I want you to know this is counter trend. So we need to see a little bit of a rally and then a stall and push on down. That's strategy number 351. Bear spread and feeder cattle, long the August, short the May. So that's a brief introduction, and I will post a more in-depth, deeper dive into this strategy and give you the background and the backstory on this one, so you know where my thoughts were when I was publishing it. All right. So a lot of changes, a lot of tweaks to our ongoing strategies. Refer to the PDF version. And it's always trader's prerogative if you want to change things or not change things. That's totally up to you. But you'll see where I've tweaked the targets and raised the stops, tightened up the stops where possible also. Okay. I think that brings everybody up to speed. If you have any questions, comments, anything of interest, feel free to let me know. I am going to leave it there, and thanks so much for watching.